Hello and welcome everybody to Oil Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. And today, of course, we'll be talking about our forecasts and key levels for the week ahead. So firstly, what do you need to know about the oil market at the moment? Well, essentially, last week, of course, we had a bombshell drop to the market where Donald Trump had proposed to increase trade tariffs on China and actually went ahead and did that on Friday last week. Now, what has been really interesting is that just yesterday on Monday, we saw China, they retaliated, and we've seen quite a significant move to the downside with oil over the last 24 hours. In fact, this is very much in line with what we've been seeing with the overall net long and net sell short positions with hedge funds over the last 2 weeks. So essentially, hedge funds and money managers, they have trimmed their net sell short positions over the last 2 weeks on US oil to the lowest in over 1 month. And we've continued to see oil come off the recent highs where it had broken out to 5-month highs. It was up 40% on the year. And at the moment, US oil is up approximately 30% so far in 2019. So why is oil going down at the moment? So essentially, you have the US and China, two of the biggest economies in the world, which currently are going through a trade war, which overall is anticipated to have an impact on US oil demand. And as such, that is having a negative impact on oil prices. We've actually been taking advantage of any rallies on oil over the last week to sell into these rallies. In fact, just yesterday, banking just under 100 points on one of our sell short positions on US oil as we saw the price tumble back down, back below 61 US dollars per barrel. So at the moment, what I would look at for this week again would be approximately a 300-point range for oil. We're finding resistance at the moment around that 63.50 zone, which we also mentioned on the week ahead report as well. And we're looking for a move back towards that 60 to about 59 US dollar per barrel level. Now, yesterday we actually hit $60 and approximately 50 cents per barrel, and we broke out to $63.30 per barrel. So we're seeing about 300-point range already just on the Monday, a little bit like last week where most of the volatility for oil occurred on the Monday. So what I'd look out for this week is essentially I'm still looking for potentially rallies to get sold into for WTI crude oil. But I would also be mindful that there is a lot of support at the moment around 60 to 61 US dollars. And there's probably going to be opportunities to trade that range as well. So if we do springboard off that 60 to 61 US dollar per barrel level, we could then see a revisit back towards the upper end of this range here. So we could essentially see a move back towards the resistance zones here of about 63. And then you're coming into essentially the midpoint of the Keltner channel, the 21-day moving average. And at the moment, traders are using that as an opportunity to then sell back into rallies. I think a really key level for US oil over this week will be whether we can break and close below $60 per barrel, because oil tends to move really well within these major round numbers. So for example, if we do break and close below $60 per barrel, well, of course, next we're going to be looking for a revisit back towards 59, 58, but then ultimately over the course of the next few weeks, we would anticipate the potential if oil holds below those levels, particularly if oil builds up momentum on the weekly timeframes as well, where you've got weekly breakdown and deterioration in price. We then look at the potential to break back down towards $55 per barrel. And then moving into June as well, it's not really such a strong seasonal month for oil either. Usually the month of May is supportive for oil, not as much as April, where normally April you're looking at approximately a 6% gain for oil, whereas over the month of May, usually oil tends to give back about approximately a 1% gain for oil prices. But we have a wild card this year, of course, in the form of the trade war that's going on between the US and China. You want to really keep an eye on headline news. Now, this week, we've also got on Wednesday, we have the oil inventories data. So that will be really important, which will be coming out on Wednesday at 3:30 London time. That can be a big move as well. Last time we saw a drawdown on the oil inventories, which caused a spike to the upside for oil. The week before that, we saw the biggest surplus in crude oil inventories since September of 2017, which immediately caused a sell-off for oil. That's a very tradable event. So again, that is Wednesday at 3:30 London time, and you can very likely just trade those ranges at the moment between that $60 per barrel level and up to around 63.50 is the range I would look at. Just note where we're coming into a lot of resistance around that 63.50 and be mindful that that's where sellers could come in. On the flip side of that, of course, if oil can can break above 63.50, close above it, and then we start to springboard higher, then oil will very likely start to make a move towards the end of this week or into next week and further weeks this month, back up to that $65 per barrel handle. So look out for that as well, because we are still at a bit of a critical juncture for oil as to whether it can hold $60 per barrel and springboard from that level, or whether we're just going to see resistance around 63.50 driving the price still back below $60 per barrel. Now with Brent crude oil, it is worth noting that hedge funds and money managers, they've increased their net longs to the highest in 7 weeks. So with that, it could actually be quite important as to whether Brent crude oil, it can bounce again from key support around the $70 handle. If it does manage to find support around that zone and springboard higher, it could actually lead oil just as a correlation, WTI crude oil higher as well. We saw that yesterday, so on Monday in the early part of the session, Brent crude oil broke out first, US oil followed that shortly afterwards. So you really want to keep an eye on data this week. We've also got the API data, which is coming out on Tuesday, and that will be coming out later on in the evening, just after 9:30 London time. You have Wednesday's oil inventories data, and then later on in the week, you have the Baker Hughes oil rig count as well. So you really want to just keep your eye on the major breaking news items this week with respect to US and China for any additional updates regarding negotiations and how it's going. Even Donald Trump tried to talk it up a little bit more at the end of Monday's session, saying he expected trade negotiations to go well in the future, which did boost the S&P 500 a bit in the early start of the session on Tuesday. Oil is finding some support at $60 per barrel right now, but again, look for that range. So that's where we could look for evidence of support around $60 per barrel to trade it back up towards the upper end of the range, and then look for resistance to come in around 63 to 63.50. A breakout of the range in either direction, so a break and a close below 60 is a sell. Again, I would look at a sell short opportunity, and a break and a close above 63.50. I would perceive that as a buy opportunity as well, particularly the price structure on higher time frames. So for oil, if you look at the weekly, it is starting to find some support, springboarding off that $60 per barrel handle. As always, oil being the most heavily traded commodity in the world, there's just great opportunities day to day on oil within that normal volatility, where so far even on Monday it moved over 300 points, and you can definitely catch some points here in either direction as long as you are keeping an eye on those major levels and the major breaking news, and keep an eye this week on Wednesday's oil inventory. So with that, I wish you good luck with your trading, of course, and we'll see you back here next week for Oil Asset of the Day.